Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we're breaking down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve, and here are some of the trends we're going to be diving into. World leaders spoke, and Wall Street liked what it heard. All major indices got a boost after the U.S. and China agree to temporary tariff cuts. We're taking a closer look at what that truce means for the markets. And when President Trump said the phrase, "It's a great time to buy," stocks seem to have responded. We're going to break down the correlation between how the S&P 500 is performing and Trump's declarations. And consumers may not be feeling price relief when it comes to getting a new Apple device. With or without tariffs, Apple may be raising iPhone prices. We're exploring everything you need to know around gadget pricing. Well, Apple shares jump after the U.S. and China agreed to temporary / reciprocal tariffs, yet despite temporary tariff relief, the tech giant considering price increases for its upcoming iPhone lineup. It's according to the Wall Street Journal. Maxim Group Managing Director and Senior Consumer Internet Analyst Tom Forte joins us now to discuss. Tom, always great to see you. So let's dig into this journal report, Tom. They say, citing sources, Apple is considering raising iPhone prices this fall alongside new features, design changes. As a financial analyst, Tom, you know Apple as well as anybody. You read that report. What'd you make of it?
Yeah, so going back to that March earnings call, Apple was hesitant to say that it was going to take price. It said it was considering raising prices as a way to mitigate the impact of tariffs. So I do think that it seems logical to me that the company may take price on the iPhones. The good news all along for Apple has been that it's a premium brand. It has pricing power. So while not able to offset 100+% tariff from China if necessary, it can raise prices to mitigate it. So I do think that there's some logic, or that makes a lot of sense to me, that Apple may want to raise prices on the iPhone independent of the tariff situation.
And so they do have pricing power, Tom. I guess, how much power do you think? I was speaking, just to put some numbers on it, I was speaking this morning to Gene Munster, now with Deepwater Asset Management. I asked Munster this question, and his take was, well, he thinks if a 10% basic tariff does remain in place, if that's the case, Tom, then he thinks Cook does raise iPhone prices 5% in the fall. He doesn't think 5% would dent demand materially, but those numbers, I mean, roughly, Tom, do those make sense to you?
Yeah, so Josh, as you know, when Apple raises price, it may raise the price of the Pro, but not the base model. It may raise the price of the Pro Max. It may raise the price of, getting higher memory. There's a lot of different levers that Apple can pull when it comes to increasing prices. On a notion of a 10%, call it permanent tariff, a 5% price hike makes a lot of sense to me. But I do feel like Apple's benefiting from carriers who are, once again, heavily subsidizing the purchases to improve their competitive set, or where they stand competitively versus their other carriers. So in that regard, maybe you could argue that they could raise prices more than 5%. So 5% I think is a reasonable number, but I would argue that potentially the full 10% is also possible.
Interesting. I mean, more broadly, Tom, I'm just curious to get your take. How excited do you think Apple investors should be for that new iPhone 17 family that we would expect to get unveiled in September?
Yeah, unfortunately, Josh, I guess the answer is not very excited. So I think that what we saw with Apple Intelligence is that artificial intelligence wasn't resulting in the super cycle we hoped for. It wasn't even resulting in an upgrade cycle half as good, or nearly half as good, as what we saw with 5G. So I think right now it's unclear to me what'll be the needle mover, flip phone, meaning like form factor, instead of Apple Intelligence. But I think the good news is that now they have a much more benign tariff environment, and there's reason to feel good about the iPhone, even if we can't get super excited on an AI upgrade cycle, as an example.
I know you're a hold, Tom, on Apple. What are the, you talk to clients and they ask you, Tom, what are upside risks I need to think about? What do you tell them?
Yeah, so as far as risks to having a hold rating on Apple, I think the risk would be that you would have much stronger sales of the iPhone than you've had. So the argument there would be that they finally make the adjustments to Siri that they've been talking about. And number two, you saw a very significant improvement in trend in sales to consumers in China in the March quarter versus the December quarter, down low single digits versus down low double digits. So if you saw a material improvement in sales in China, I think that would also be risk to the upside as far as our hold rating goes.
And Tom, President Trump also said this morning, he spoke to Tim Cook, and that Cook will up his numbers, he said, build a lot of plants in the United States. As a financial analyst, what, if anything, do you make of those headlines when you see them, Tom?
So yeah, Josh, I hope you like me were blown away that Tim Cook was naming on a by-state basis where they're going to expand in the U.S. in the last earnings call. And I apologize that I can't name the 9-10 states off the top of my head. But I think that clearly, my thesis is that the trade negotiations between China and the U.S., or the U.S. and the rest of the world, what success looks like is getting chips made in the U.S., having a pharma supply chain that's a little more U.S. and a little less China than it is today, less so much for apparel and other categories. So it's unclear to me that we'll ever see an iPhone made in the U.S., but I do think we'll see chips and we'll see a lot more items made in the U.S. And Apple clearly was highlighting that in the last earnings call where Tim Cook named the 9-10 states where they're going to expand their efforts.
You know, Tom, we're talking all things Apple here, but you cover a lot of names. This U.S.-China trade truce we see announced today, what other names in your coverage universe, Tom, could be materially impacted by that?
Yeah, so clearly it's beneficial for Amazon. And then on the smaller cap front, it's beneficial for the toy maker Jack Pacific, and then for the logistics company GigaCloud, which has a lot of their logistics where they're connecting sources in Asia with U.S. marketplaces like Amazon, like Wayfair. So any company heavily dependent on China, today was very good news for that company, clearly beneficial for Apple, also for Amazon, and then from some smaller cap companies as well.
Tom, always great to see you, always great to have you on the show. Thank you, sir.
Thank you, Josh.
Stick around, much more Ask for a Trend, that's still to come.
It's a jam-packed hour.
Well, U.S. stocks surging, closing near the highs of the session. A deal to temporarily slash reciprocal tariffs between the U.S. and China lifting spirits. And Yahoo Finance's Jared Blikre joins us now with the trading day takeaways. Jared.
Thank you, Josh. It is risk on once again. And to be fair, it's been kind of risk on for the last month, but everything was kind of out of whack and things are starting to seem a bit more normal today. Let me just go down the list of some of the price actions, some of the sector movements that I've been looking at today. This is the S&P 500 best performers. And this is a pretty interesting mix. You got some semiconductors in, Apollo, that's our parent company. So you got private equity, a bunch more semiconductors, Carnival Cruise Lines, a bunch of retail names like Lululemon, and then also a couple energy names. But for the most part, the utilities weren't doing that well. And if I sort by performance, you're going to see in the upper left, energy and SWK, that's Stanley Black & Decker, kind of a dark horse here, came and stole the show today. So we have a lot of retail names and a lot of tech names that have just come roaring back. What did not work today? Now, this is an interesting mix too. I mentioned utilities, those are more defensive, and so those kind of make sense that they didn't do as well today. Staples as well, Waste Management, Altria Group, cigarettes, CVS, Cigna Group in terms of healthcare, didn't see that do that well. But if we go down the line here, I'm going to show a couple different, let's go to the sectors and just show you what outperformed. XLY is consumer discretionary. That's really an Amazon and Tesla story. I've been showing the NASDAQ 100 all day, so I'm not going to show it again, but tech also outperformed. What didn't do well, there's utilities, real estate, staples, all three of those defensive. And I can show you gold miners. Gold had an off day today. It's kind of a defensive play, so not surprisingly, we saw the gold miners down as well. But you're not going to see too many other red screens like this for the most part, and I'll go through the software screen. Here's semiconductors. Here's disruption in terms of ARC innovation components. Very, very risk on day.
So those are the headlines.
Yes.
Under the headlines, Jared, under the hood, what are the subtleties we need to be aware of?
All right, I've been watching dollars and yields. So the correlation between dollars and yields have been, it's been upset since the tariff era. And before Trump came in as president, in the bull market that we had starting in the fourth quarter of 2022, we saw dollar and yields, they were moving in the same direction, either up or down most days. But then the tariff, it kind of changed things. And so we saw the whole world just selling dollars in order to basically get rid of dollar-denominated assets. But something happened last Wednesday after the Fed meeting, and I was noting this right here actually, and that is the dollar and yields started going in the same direction. So this is a year-to-date chart of the 10-year T-note yield. Just want to show you what happened today. Up 8 basis points. That's a pretty big jump there for the 10-year. US dollar index up 1.5%. That is a huge move for a currency, much less the reserve currency of the world. And why am I saying risk on when the dollar is up so much? It's not so much that the dollar index is up. It's a kind of a signal that the world is saying, okay, it's okay to own dollars again. And that was a problem in the tariff. So it's only been 3 trading days since I've seen this relationship kind of reassert, and we'll have to see what happens going forward, but this is a very good sign to me.
Final point. I'd like to ask you about Bitcoin, perhaps. Should we get to that?
Because
it was a risk-on day. Bitcoin down. What's the issue?
Exactly. And as I noted last week after the Fed meeting, it was crypto that was kind of leading the way. We saw muted reactions in the indices, and we didn't see a lot to get excited about there. But let's check out crypto. So this is another kind of red board. But if we take a look over the last 5 days, huge movement in some of these. Let me just show you Bitcoin, and we'll do a year-to-date chart. So a lot of this movement happened right in here. And by the way, we are within just a few percentage points, maybe 5 percentage points of the record highs, which are over here. So Bitcoin led the way, it got started, but now it's kind of stalling out near those record highs, as a lot of markets are wont to do. If you're looking at this, this is kind of like a giant cup. And what we might be doing is forming a handle here before we go higher. So the way I see it, Bitcoin is just kind of pausing before it breaks to those record highs. And it might take a little bit, but I think the bulls have made the case here that this is probably the market, one of the markets to be in. It is a leader. Ethereum, not so much a leader, but it is playing a game of catch up. Let's look at over the last 10 days. You can see 34%, pretty impressive move there. But again, today itself, we're looking at a downdraft of 1.12%. Why? Because we have the 200-day moving average right there. So again, another technical play in Ethereum and also Bitcoin, but I still see them as leaders.
All right, Jared, thank you, buddy.
You bet.
Appreciate it. Stick around. Much more Ask for a Trend. That's still to come. Stocks surging to end the trading day, and they've been rallying since President Trump told investors a month ago that it's a great time to buy. Yahoo Finance's Julie Hyman joined me now with a closer look in our chart of the day.
Yeah, remember that, Josh, when the president posted on social media that it was a great time to buy? And at the time, it didn't feel like a great time to buy to many investors. That was because we were still living under that sort of worst case scenario tariff regime, the reciprocal tariffs that the administration had imposed upon a host of different countries around the world that were quite high in many, many cases. Well, after he posted that morning, the administration then came out and said that they were going to get rid of some of those tariffs, and we saw stocks rally from there and then sort of continue up from here. Now, as of Friday, the S&P 500 had rallied about 14%. The president posting again saying that people should be buying stocks on May 8th. So the total gains since that bottom that we saw on April 8th or so has been 17% at this point. And we've been having the discussion throughout the day, especially in the wake now of this announcement that the tariffs, the worst case scenario tariffs against China, are going to be reduced. We've been having this discussion about what is now priced into the market. For the year to date, the S&P 500 is off a little less than 1%. So not much changed on the year. And if you look at where strategists are forecasting the S&P 500 to end the year, they're really all over the map in a pretty dramatic fashion. JP Morgan has the lowest estimate on the street at 5,200. Wells Fargo, which hasn't changed its forecast, is still around 7,000 for the S&P 500. 6,150 is the highest of the reduced forecast. That's from Deutsche Bank. So as you can see, really, there is a wide range of outcomes that strategists are talking about. They might change those forecasts, of course, now that the tariff picture has changed. Just as Goldman Sachs came out just a little while ago today and said the recession odds have now fallen to 35% from 45%. At one point, they were as high as 55%. So again, this rapidly changing situation. And we got a couple of different views on what is priced in today. We talked to Christian Chan from AssetMark, and he talked about that he thinks there is still upside potential from here. Ryan Kelly of Hennessy is not as convinced that we are going to see the earnings growth this year to be able to support continued strong returns from these levels. So yes, we've had this bounce, but where we go from here, there is a really broad dispersion of opinions, Josh.
We shall see. Thank you, Julie. Appreciate it. Well, that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.